Hello. This is a mic test. So, hello guys. This is Nirav again coming live for the 14th Trading Opportunities webinar. And currently I'm just trying to check if the audios are working fine on all platforms. We are currently live on YouTube and tradingview.com. Seems one of the alerts has also gone off. So it looks like the audio is going fine. I'll just quickly connect and check on YouTube as well. 1 second. Okay, so guys, it looks like we are live and things are looking good. Hello, Darwals, nice to see you again here. I hope you are doing well. So, let me give you, before the introduction, let's have a quick look at the legal disclaimer here, suggesting that all content presented in the webinar will be purely for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other purpose, you yourselves will be liable for your profit, your loss, or your loss of profit, whatever the case may be. And rest of the stuff you can just read over here. Okay, so with that out of the way, now let's head over and let me give you a very quick introduction. So guys, my name is Nirav Yadav. I am the admin, owner, founder of the website called 50eyes.com or 50 Eyes Market Analysis, right? And here I have been presenting my views on the markets, including but not limited to Forex, commodities, indices, stocks, cryptos, right? And I'm first and foremost a trader, and I also do mentoring. The area of expertise I have is Elliott Wave, and on Elliott Wave I have also published a book called Think with the Markets, Secrets to Achieve 80% plus accuracy using Elliott Waves. It is available on Amazon Kindle as an ebook for instant access. And before we move further, let me give you one of the quick highlights about my work. For more than 7 years, I have been forecasting the markets, analyzing them publicly, and I have kept a track record of all the forecasts I have done over the years thus far, and the accuracy of my work stands higher than 80% for all those years. As you can see over here in the track sheet, 2016 we had 83.34, 2017 87.50, 2018 is 84.61, 2019 is 84.88, 2020 is 88.52, and 2021 is 82.22. Anybody can go there and check my work anytime they wish. And it's all compiled in a sequential manner. You can just check the date when the analysis was done, the instrument like crude, gold, S&P, Nifty, etc. The analysis, what was the analysis, and where is the video link for it, right? So that's how you can just check it. And again, I would like to just point it out, because this is the introduction part, that in this business of trading and analysis and accuracy, even higher than 60% is considered outstanding. And I have maintained 80% plus and nearing to 90% for 6+ years. So that was it for the quick introduction. If anybody can give me one more final confirmation about the audio and video before we start with our first chart of Euro USD. I'm just loading in the charts on the screen. Yep. So Euro USD chart should be visible on screen at this point in time. Outstanding. Right. And I'm seeing some considerable delay over here on YouTube broadcast. So I expect the comments will come in later. Thank you, John Burgeon on YouTube, for the confirmation, and Sanjeev for the confirmation on TradingView. Okay, so the way we will proceed with the charts is, first I will go over the chart of Euro USD, EURCAD, USDJPY, EURJPY, crude oil, gold, S&P 500, Nifty, and in the end Bitcoin. That's a sequence we'll follow. After every chart I discuss, I'll ask you guys if you have any doubts. You can just post them in the comment section, right? And while I'll be discussing the charts using the complex uh, patterns and complex structures of Elliott wave, I'll try to simplify as much as possible. And if you have any doubts, you can again ask me and I will definitely answer you, even if I have to repeat myself. No issues with me. So at the first chart of Euro USD, as you can see over here on screen, is what we have over here is, let me just quickly go over it again. If you guys are following me for the past webinar, this pattern, we have discussed it like so many times. So just to give you a quick recap, we were able to catch this leg up, this particular momentum on this chart, right? And we have been tracking it thus far. In the last webinar, I suggested that it has done the bare minimum upside movement, and even if it continues more to the upside or not, we have no confirmation. So if you were long, that is, if you were following me, you would have been long most likely, and if you were, then it was time to book partial profits or get out of this position. Now let's have a look at what has changed over the past few hours or whatever time has passed. And just to give you one more heads up, I do these webinars every Monday, Wednesday, and Friday, 2 p.m. GST. So join me live and do not miss on the opportunities, because those opportunities are discussed in live market conditions. So some of them might be gone after 10 or 15 minutes after the webinar is complete. Okay, so so what we have over here is, it looks to me like the wave Z may have completed over here, right? And the actual strategy here I have in mind is that I am looking personally to enter shorts on this market. As such, I can enter right now and put this as the stop loss, right? But I'll be more comfortable once this market shows some strong bearish bar. By strong bearish bar, basically I mean is that we are currently on the hourly chart or the hourly time frame. Strong bearish bar basically means a bar which would do something out of the ordinary. In this particular case, basically out of the ordinary itself is a wake bird, so I'll be a little bit more specific. So we seem to be having a sideways range within this box, so I would like to see a bar which breaks below it and it closes near the low, and also has a what you call distance or price movement or pip movement at least average of the previous bars or a little bit greater than the average. So a strong bear bar breaking below this congestion zone is something along the lines of out of the ordinary, is something along the lines of what I'm looking for to enter shorts. And as I said, technically it's still a short. You can just enter right now with the current high as your stop loss, which is around 1.07378. And let's consider the reasons why I'm thinking the way I'm thinking on this counter. So the reason is, I personally think that this market was following a WXYXZ corrective pattern. In Elliott wave terminologies, a WXYXZ pattern is basically something that looks like this, and there's the first leg up W, second leg up Y, and last leg up Z. All three are connecting by a connector wave X. So that comprises the WXYZ. In this particular case, we seem to have completed this Elliott wave pattern already, right? And even if I'm wrong, the stop loss is very small. So this is a, I personally think this is a trade worth risking small amount of money or capital in, right? So that's the quick take. We are looking for possible sell-offs, right? That's the main analysis or the hypothesis one. And as you already know, if you are following me, that I like to consider possibilities on both sides of the market, because that's what analysis basically means, that you consider everything possible and then you take the path which you think is of least resistance and remain prepared in case it does not work out. So in case this does not work out, what's going on? So if you guys recall, we were considering this as a wave 4 in the other direction, and we were considering this as a wave 4 in the longer time frame chart, like, or on the 4-hour chart basically, or daily chart, right? So it is definitely not a wave 4 of any what do you call, I mean, basically what I'm saying is that our long term time frame chart is not really getting followed over here, right? So what the point I'm trying to make is that it is possible that we have to completely relegate this count of WXYZ at a later point in time, and we possibly will be seeing an impulse if that count is not followed, right? So for that to show itself, that is for us to relegate this WXYZ count, we don't have any evidence yet. But just a quick heads up that if it's not this, then it will be a nested 1-2 formation, right? With the current leg probably inside wave 3. I will have to redo it again. But as I said, I will be only interested in doing it once I see a break above the last high with a force greater than the past bars in that time range. So basically greater than the average. That's what I'm trying to say. So basically that's the alternate views. So just to keep ourselves prepared for both possibilities. So that was my take on Euro USD currently. I'll just wait for a few seconds to see if you guys have any doubts. And just keep in mind, if you are clear on whatever we discussed, just type in clear in the comment section. Before we move on to the chart of EURCAD next. Okay, thank you, Darwals, for your confirmation. So now let's head over to our chart of EURCAD, which is right here on screen. And as you guys remember, we have been having the same discussion in every other webinar that we are interested in seeing possible sell-offs or joining possible sell-offs once this market goes below this green channel, right? So now it has gone ahead and done that. As a matter of fact, the alert came right after I went live. If you check the recordings, first 10-20 seconds, there was an alert on screen. So anywho's, so we have a sell over here. I like to move the alert there, less than. So I will personally like to enter the shorts below this level, which I just marked 1.4395. And the reason is that in the past, this market has given some false breaks. So I'm just waiting for it to confirm this break at least, right? And as I said, not much complications here. Your stop loss should be this last high. If it's taken, you should exit this position in loss. That's the setup here on EURCAD. Really simple. And we sort of timed it. Another, what do you call, proof that you should join these webinars live, because we just got the move, hopefully, if it continues below our alert level. So I think it's very simple. I'll just repeat it once again. The setup we are looking for is more sell-off with stop loss at the high of 1.460 on EURCAD. And the pattern which is completed over here is a zigzag pattern from this point of reference of 1.32768. So this Elliott wave pattern basically has 3 waves. First wave up, correction down, and then next wave up. So once this kind of structure, as you can see on the right hand side, first wave up, correction down, next wave up. So you can see the C wave has completed. A was here and B was here. So that's my explanation on the current pattern in Elliott wave terminologies. If you guys have any doubts, I'll wait for a few seconds in the comment section. And also, guys, on YouTube, if you guys are watching, I can see there are people who are live. Definitely participate a little bit more, even if you are understanding everything, typing in clear understood, because after all, it's a webinar and not a video recording. So next chart will be of USDJPY. Thank you, Rawals, for the confirmation on TradingView. And what about you, John? And there are a couple of other people who are live on YouTube. Do participate a little bit more. Before we move further, let me reload the chart of USDJPY and see which one we are following. Okay. I think this is the one we were following, but it seems to have forgotten my counts. Or maybe I just didn't hit the save button. Okay, so there it is. This is the count we were following. A, B, C. So, guys, as you can see, it is untouched from the last webinar. So, let me just thank you for the rocket like on the trading view. So, guys, uh, if you are liking the content, make sure you hit the like button on YouTube and the rocket button on TradingView. So yeah, again, getting back to the USDJPY chart, when we were doing the last webinar, there was a very clear bias I had on this chart that the count was, let me just give you the whole picture. Or we can just start from here because after all, this is the count we are following. Let me just get rid of some stuff. It's fine over here, it's fine as well. Okay, so the count we were following were that we thought from this point of reference around the price of 134.516 on US dollar Japanese yen, we had an impulse in the other direction. That was our main bias, and you can see the count was 1, 2, 3, 4, etc. So an impulse in Elliott Wave terminologies will look something like this, right? We just label it as 1 up, 2 down, 3 up, 4 down, and 5 up. It's a rather simple pattern. So if you look at this particular point in time, my count was that, and yeah, one more point, that the counts or the Elliott wave patterns are fractal in nature. By that, what I basically mean is that if you look at this wave 3, and you magnify it, right, it should look like 1, 2, 3, 4, 5 again. So waves 1, 3, and 5 will have 5 waves inside of these, inside of themselves, right? So that's what exactly you see. So if this was the circled one and this was the circle 2 and the circle 3, you can see here circle 1 red, circle 2 red, and circle 3 red over here, which I had pointed out. Then this circle 3 will have again 5 waves inside of it, which we can label as double bracket 1, double bracket 2, double bracket 3, 4, and 5, right? So that's basically what fractal nature means, right? So coming back to the actual chart, the analysis was that if the market takes out this level to the downside, which was of 136.880, this blue line basically, and takes this as a resistance, then this count will get invalidated, right? So as it happens, it did go lower and then it was never able to take it out. So at this point, we will have to redo this count, and that means it is not really either it's following the impulse in a different manner or it is not really the impulse at all. So let's consider what possibilities exist at this point in time. So first of all, the first possibility that I'm thinking is that we may be progressing as a possible sideways pattern, specifically a triangle, right? So in the sideways pattern, specifically a triangle, what I basically mean is that, one second, let me check one more thing. Nope, that becomes less likely. Okay, so that is, I don't think it's progressing as a triangle. I just checked one thing which came to my mind, and it's not fitting in with the guidelines I use. So that means either this has completed the B wave here, and this is actually progressing for the C, or the second thing is that that B wave is completing or continuing, not completing, continuing as a complex correction. Complex is not out of question right now. So that would make it as dot W, let's say, and dot X and dot Y in progression. Okay. So with the new outlook I have on this chart is that either this market is still progressing as the wave C, in which case we will have to redo the counts, and redoing the counts here basically is not that complex. 1, 2, 3, 4, 5, and that's our 1, 2, 3, and that's 3. So I think that would be this case. Instead of circle 1, we will have a lower degree 1. I'll just continue that. Lower degree 2 over here. And remove these to the side. Okay, so this is the updated view I think this market is following here. What basically this is that let me remove this as well. What basically this is that this looks to be the A or one complete here. And by the way, guys, in Elliott Wave Technologies, we are looking at either a zigzag in the upward direction or impulse. Impulse basically would be 1, 2, 3, 4, 5 up. So to be more crystal clear, what we are basically looking for is something like this, right? So this first leg, you can call this an A in the upward direction. The downward movement is what we call the B wave in the Elliott Wave terminologies, and then the next leg is called the C wave. So the first possibility I'm going to discuss, let's call this H1 hypothesis 1 basically, is suggesting upward movement in the sense that this C wave is still continuing, right? The characteristic feature of C wave is that it will take out the high of A wave. So if you look on this left hand side, this is the high of A wave and it should be taken out. That's the characteristic feature of C wave. So if C is continuing, then obviously that means we are seeing some sort of nested formation and this market has much more upside to go, right? And that's our hypothesis 1, suggesting that the C wave is still continuing in the upward direction. When does this hypothesis get invalidated? It gets invalidated when this price level of 134.576, which I have already placed an alert on, is broken to the downside. So strictly speaking, in case of longs, this will act as our stop loss. That's our hypothesis 1. Let's look at hypothesis 2. Hypothesis 2 is suggesting something completely different. So if you guys remember, I just said that in the zigzag for pattern formation, the minimum requirement for this wave C, just focus on this side box that I drawn. So in this box, as you can see, the C wave should just take out the high of wave A, right? So if it's just going to take out the high of wave A, then as I just mentioned, this high is already taken out. This market has already gone above the A high, right? So in that sense, you can say that wave C is even complete. So the hypothesis 2 hence suggests that if wave C is complete, then this market can just continue in the downward direction. And there is no requirement for this market to continue or take out the last high. So the consensus becomes quite clear here based on both of these analyses, hypothesis 1 and hypothesis 2, right? What I think we can conclude is that we have a clear long opportunity if the market takes out the last high, right? Which is around the level of 138.14, right? And there is a short opportunity, but the confirmation is not yet there. So the confirmation for that is 134.557. So basically it becomes a sort of wait and watch at this point in time. Both sides are possible, and I'll just clarify that to conclude the analysis. Confirmation of longs is above the high of or above the last high around 138.11 or .14. Confirmation of shorts is below the recent low or the wave below, current wave below 134.576. So at this point in time, both scenarios are possible, with my current bias being a little bit to the more upside. And the reason for that is generally wave C's will not end with only this small movement. That's my take on USDJPY. We'll now move on to EURJPY. And thank you, Darwals, already for the confirmation there. Other guys, if you have understood the analysis, just type in clear or understood or something. And if not, you can just ask your questions. Hello, Chris. Hello, Radu. Thank you. So guys, I see confirmations on both YouTube as well as TradingView. So let's move ahead with the chart of EURJPY. And let's see what it's doing. This also needs a little bit of updation. So as you can see, guys, here currently we are on screen with the chart of EURJPY, right? And it looks like the analysis we did in the last webinar does not seems to be having a follow through, right? And if you guys remember, also there was one more point I mentioned. I mentioned that among the two of them, among the EURJPY and USDJPY, it was better to stick with USDJPY. Even though it also needed an updation, it's still much more clearer compared to what we have on screen here. So anywho's, it's now forming something else. Let me just take a quick look at what it might be doing. So it has retraced completely. That means, but how could it be a correction? So we're gonna have to have a quick look at the longer time frame chart A, B, C, D. Okay, now considering that into picture, we can update a few things here. It makes much more sense. Let's remove that as well. Okay, so guys, from here, again keep in mind this is a very complex count on EURJPY. I am following it from down there, and it's a diagonal from. Let me just quickly show you what it is. So we are following this as a diagonal. I have 3-4 more counts for it over here, over here, over here, over here. You can see these are all EURJPY charts. So we have total 5 charts on EURJPY. But I won't be discussing all that. We don't have time for it. So I'm just discussing the one which is the most clear one. Yeah. So from the price level of what is this 114.456 on EURJPY, what we seem to be having is a diagonal pattern in the one direction, and some of you guys might not know about what that pattern is. So it simply is basically something like this. So if I draw it in the rough area over here, the first leg is called a 1 up, second is a downward move called a 2 down, and then 3 up, the 4 down, and then the 5 up. So the most important characteristic trait of this pattern is that this 1 up and 4, they both will have overlap. Let me see. Yeah, I can change the color here. Yeah. So as you can see over here, the 1 and the 4 will have an overlap here. So in this particular scenario, we had the 1 here, the 2 here, the 3 here, the 4 here. And the fifth one looks to be continuing as a very complex pattern. Right now, that is exactly what we are in at this point in time. Right. So, by the way, also, if you observe, there is the overlap between 1 and 4. Right. And I can also draw the trend lines here. So they also fit in with this rough structure we had. So that's our rough outlook on what the diagonal is. Anyways, let's just get serious about what the current pattern is. So the current pattern I have over here is, as I said, is a very complex pattern. Complex enough, I will have to check it again. 1 second, W and then X and Y. 4 for W and A, B, C, D, E for an X and then up for a Y. Okay, so there are two possibilities here. First, if this white trend line which we have, which was the trend line of the diagonal, if it's broken to the downside, then only we are interested in sell off or shorting this market. Nothing like that has happened thus far. There was a break, but this was a false break. It never sustained below it. This one, there was this sharp spike down, but it never sustained below this level. So currently what I'm assuming is that if that happens, then that will happen by hitting our stop loss or by proving our current analysis wrong. So our current analysis is suggesting that one leg up is still remaining. And how is that one leg up remaining? So this is our wave 4. The one leg up is remaining considering that this is the first leg up. And this is a correction as a possible triangle. Or maybe it's continuing. And then once this triangle continues or completes whatever it is doing, then we will have one leg up remaining, which will complete the fifth wave. of this diagonal. So long story short, we are forming a possible triangle pattern from this point. Keep in mind, it could be some other pattern as well. I just chose this triangle pattern because it seems to be following some guidelines which I have on triangles. So now let's look at it on the shorter time frame, let's say hourly. And all of this might be a little bit too much for people who don't know what Elliott wave is. So just don't mind that much. It's not really that required information unless you are interested in learning the entire thing. So the main thing we are interested in is where is the trading opportunity here. That's what the name of the webinar is. So as I said, let me just push this thing on the chart. Yeah, from this point we have a W complete here, and we are hoping for a triangle to complete, then followed by an upward movement. So as I said, the triangle will have 5 waves. The triangle will look from this point would look something like this: 3 up, sorry, 3 down, 3 up, and then 3 down, and then 3 up, and then 3 down. And if you draw the trend lines should look something like this. Right. So as you can see over here, the 3 down we will label it as, let's say, an A. 3 up will be the B, and 3 down will be the C, and then the D, and then the E. So just to avoid any further confusion, because I have drawn it below it, it might become confusing. So this is the real pattern we are looking for or tracing, right? And currently it looks to me like this D wave is complete here, right? So it may even be progressing into the wave E. That's our main theme, which I think this market is doing. Second thing is that this D wave is not complete here, and it's still going up for the a little bit higher level than the current high, which is the high of, what is this, 146.788. So it is possible if the D is not here, then it's still continuing over here. Okay, so these are the two possibilities: either D is complete or D has more upside remaining. Now I personally think that if the D is complete here, then E also can be considered complete here, right? And now let's head on to even lower time frame chart, or let me see if I have labels over here. One quick thing we can do over here is, okay, with all the readjustments, I personally think we should be considering the completion of D already in place, right? That means the new trade setup here becomes to look for possible longs, and it is a rather simple setup. Technically speaking, we are interested in longs above the high of wave D, and wave D high is this level, which is the price of 146.698. So above 146.698, we are interested in looking at this market for possible longs, which should take it higher, at least above 148.436, at least above 148.436, and then you have this white trend line. So the immediate level for this white trend line, if this market goes away very fast, would take us to 150.125. So 150 levels are possible targets, and the minimum target is the high around 148.36. So that's our current trade setup. We are expecting one more leg up, triggers above 146.698, and immediate targets 148.36 and then 150 levels. That's our setup on EURJPY, and I even covered the longer time frame analysis. So that's good. Took us a good amount of time on this chart. So if you guys have any doubts, I'll just wait and see in the comment section. If you guys were able to catch all of what I just discussed, that would be nice if you can also let me know that by typing in understood in the comment section, both on YouTube and TradingView. again. And also I would like to request those of you who have joined in now, kindly hit the like button on YouTube and the subscribe button on TradingView. Sorry, subscribe button is on YouTube. The rocket button on TradingView. John is saying good stuff. Thank you, John. And that's our confirmation to move ahead with our next chart, which will the chart of, by the way, let me just put some alerts over here and save this chart. Okay, so next chart will be the chart of crude oil followed by gold. So let me load that up. Mr. Darwal's MF Darwal is saying yes, not on your level, but here to learn. That's good to know. Make sure you ask whatever questions come to your mind. I'll be happy to answer them. So WTI crude oil. Let me just quickly check one more thing before we move forward with it. Okay, so let's head over to our chart of WTI's crude oil, right? And this is the chart we are currently following, which is on screen. So in this chart, the last time when we discussed, the discussion was that I will just pick it up from the last point of reference. So this is our last point of reference. And again, guys, I see some comments here and there asking that why I don't discuss long-term time frame analysis or long-term counts in Elliott Wave. So I do discuss them from time to time, but these webinars are called trading opportunities. They are not called long-term counts or Elliott Wave counts or anything like that. So we use analysis as much as less as possible, and we want to discuss the trade setups in much more detail as much as possible. So keep that in mind. It's not a Elliott Wave forecasting or counting service. Of course, I have the counts and I do discuss them from time to time. So if you want them, the long-term counts, follow me in every specific webinar and even watch the past 2-3 ones. From time to time, I will cover one chart in the longer time frame or another chart in the longer time frame. But in every webinar, it's not possible. It will take me 3-4 hours maybe if I start doing that, and nobody wants that. They are quite long as it is. So we have a wave Y here. You can see over here. So I'm just replicating it. A wave Y here, and then we have a X wave, which is either complete or continuing. Both possibilities exist. And then it should be followed by the Z here. So that's the main count we are following. Okay. So again, you don't need to focus too much on what the hell I'm talking about here. The main pattern what we are tracking over here is, which starts from this point of reference. So the main pattern which we are tracking is this. Let's call it single bracket A, single bracket B, and the single bracket C. So this is our important pattern. Now, what is this single bracket A, B, and C? So this is an Elliott wave terminologies or in Elliott wave principles, a flat kind of pattern, and in specific, it looks like a running flat kind of pattern. And what a running flat is basically that if this is your point of reference, which is the starting point of your analysis, then 3 waves up are called an A. 3 waves which go lower than the start of this wave A will be called the B, and then a small move up will be called the C. So you can see the wave A is over here, and this B wave has gone lower than the start of A. So that's the principle coming into play. And the C wave will end up a little bit up, but it will not go near the end of A. So it will not go near this level. right? That's generally what you call a running flag. So anyways, we are not really interested in naming what this pattern is called. I just talked about it because I saw it. What really we are interested in is the trade setup. So currently, as I said, there are two possibilities which exist. Either this X is complete here. So if this X is complete, that is this C is finished here, then it should see a downward leg. Then it should see a downward leg. So that is simple enough. If the pattern is finished, if the count we have on screen is complete, then we should see a straight out fall. Now the second thing is that if it's not complete, then what is happening? If it's not complete, then what is happening is that this C wave is continuing in the upward direction. So yeah, this C wave can go up and it can go even above the wave A high, then it will be called an expanded flat, which can happen, right? Actually on crude oil, it does happen from time to time, but the probability of happening of expanded flats are comparatively less on CL1 futures. I know that because I've been trading this chart for since the very beginning, since I started trading the first time. Not the first day, but since the first 1 or 2 months when I started trading, I followed crude oil. So I know this chart has a tendency to do these mind-boggling patterns sometimes. So that's why I will not rule it out. So what can we do with that? With that information in mind, we have one clear trade setup. If this market goes higher than 77.774, right, that is higher than this high, then this would suggest that C is not here, and this would suggest that C is continuing. And this will suggest that this market has two waves in the other direction. If something has two legs in the other direction, then that means at least one can be traded, right? So that will give us basically a very high probability long setup in my understanding of this market. So that makes our hypothesis one long above 77.99. Now keep that in mind that the chart we have on screen is the data feed of O and A CFD broker. Each broker will have a little bit of difference in price, and the current CL1 futures contract, which is currently running live on screen, has the price of 75.56. So you can already see there's a slight difference in the actual futures chart and the CFD chart. So just keep that in mind and don't take these levels literally. Just check them on your own chart, whichever broker you have. So that's our first hypothesis, and the second one we already discussed, suggesting straight downward movement. We currently don't have confirmation, as I said, so just keep that in the back of your mind and alert on screen like I have. That's our take on crude oil. Very clear structure. Definitely something you got to keep in your watch list, as I believe it might give us a very good trade very soon. Just wait for a few more seconds in the comment section, guys. If you have any doubts, you can just type them in. Next chart will be gold. Also, guys, a little bit more interaction would be nice. That also helps us bring the videos higher in the YouTube algorithm. So thank you, Darwals, on TradingView for the confirmation. If you guys here on YouTube are clear on what we discussed, please type in "I understood" clear, and please be more interactive in these webinars. So let's move ahead now with the chart of gold. As you can see on screen, XAU USD chart we are following, and we have what we thought was a possible diagonal. Now it is interesting to note here that this market has actually gone lower than this trend line which we had, this yellow trend line. Many things here. This count is getting what you call more complex. Now the possibilities that exist on this chart are 4 or 5 right now, what I can see without even doing any proper analysis. So what do we do here in such a scenario? What I'll do is I'll just discuss the top 1 or 2 possibilities, because if I discuss way too many things, most people here will get confused. Right, so guys, keep in mind I have some limitations of time as well, and also the limitations of what I can disclose here. Plus there is a limitation that not everybody will be able to follow it. Most people are probably completely new to Elevate Wave. Hey Rajiv, nice to see you. I'll give you a call after this webinar if you are free. So, okay, now on gold, what we have going over, by the way, if you were not following in the last few webinars, we were able to catch this leg up on gold. And like we were able to catch it with the very precise levels and way before it started the moment. So you can watch the previous webinar if you're interested in checking how we did it in live market. Getting back to the actual count on screen, what I have over here from this point of reference is the level of 1614, right? And the date is around 28 September 2022. Point of reference is basically the starting point of our analysis. So the first thing we have over here is, I believe, a wave A up, and what we have is a zigzag pattern is the most basic pattern which I have assumed here. It should be followed by a C up. So this is the preliminary or the what do you call the simplest analysis: A up, B down, C up. I have already discussed this in like so many times in this webinar. And this particular case, this is a flat structure, by the way, not a zigzag. And in this flat structure, what we have is 3 waves for a wave up. Let me just draw them. 3 waves for B down and then 5 waves for C up. Now 5 waves for C up in this particular case are in the diagonal formation. So diagonal, as I said, basically looks like a wedge. If you draw two trend lines, they will converge. This is a converging diagonal, and that's exactly what you see. So if this is the pattern which this market has followed, then it is quite highly likely that it should give one more leg down. What I basically mean over here is that if the C wave is complete here, first of all, then this market can go and take new lows. Like it can go lower than this price of 1615. However, that possibility is just one of the multiple scenarios. The second more recent possibility, or the possibility which is more simple right here, is that it can at least give us a three leg down structure. Three leg down structure means first leg down for an A, up for a B, and down for a C. And this is the classical structure which becomes more powerful if you have resistance at the trend line. So resistance at the trend line for wave B, which is exactly what looks to be the case, is making this more what do you call traditional setup in this sense. So I personally think it's a good and interesting short-term sell-off trade which we have caught, right? So basically, what are the other implications of this trade is that firstly, it could go down for the A, up for B, down for C. So targets, we can just measure this wave A down and project it from the end of B for the target for C, and then we can use some other ratios, fib ratios as well. So we'll do that right now. So we are coming around with our targets at these levels. Let me just draw them with the blue line. So these are our current target levels for this chart. And there are some further implications for this count, which I'll discuss right after I remove all this. So further implications for this count are that it is not really required for B to just give one touch down to the, or touch up the trend line. It can do this 2-3 times. It can do it like this. It can go down and then go up again and then down and then up again. So it can give 1, 2, or 3 touches to the trend line and then take the fall for this expected wave C. So just keep that in mind. Now, how do you play something like this? You play something like this with the simple concept of position sizing. You don't enter a full size position here. So if you were to risk, let's say $10,000, then you risk 2,000 here because we don't have a confirmation here. If it gives again a touch to the upside, you risk 3-4,000 here, let's say 4 here. And it again gives a touch up, then you risk, no, by the way, if it goes that much up, then probably it will not be a worthy trade, but you get the point. You need a little bit more confirmation and you need a little bit more capital to add when the confirmation comes. But at the same time, entering partially ensures that if the market moves in your favor, you haven't lost the trade. Now, this was my take on gold, right? This was my take for how to trade the wave C down, which we are expecting here, right? And as I said, there are 4 or 5 possibilities which I can see right now, but I'll just avoid discussing them because it will take at least 30-40 minutes just to discuss this. At this point, I can just see that. So just give me a confirmation if you were able to catch this, and keep in mind this analysis you will have to work a little bit yourselves and probably check the last webinar. I have covered gold in a little bit more detail in the last webinar, so you will be able to catch a few more possible hypotheses from there and form a proper mindset for executing trades on this one. Let me know, guys, how far you understood. Okay, thank you, Darwals, on TradingView. What about you, Rajiv and John on YouTube? Radu also seems to be there. Were you able to catch this? And next chart we'll be discussing would be of S&P 500, which is following our counts rather very nicely. Okay. It looks like everybody's here. This is complex and I can clearly grasp. I'll need. So no worries. Yes, John. So if you are completely new, then it will be sounding a little bit complex. What you can do is once the webinars are over, you can just rewatch that part which you found complex. And I'll try my best to simplify these webinars a little bit more. Probably best not to discuss what you call long-term counts. That I have reason to believe causes people to get confused a lot. Anyways, let's head over to our chart of S&P 500, which is precisely following our counts. So if you guys are not following from the last few webinars, I like to point out that we were able to catch the S&P 500 fall. And I specifically said that if this market goes below this channel, or you can also take this level, both of these levels were mentioned below 39.27, then it's a sell short, clear sell short. And the predicted pattern is a zigzag pattern. A zigzag pattern basically is, as you might have heard me say, is 5 down, 3 up, and 5 down pattern. First leg down is called the A down, the B up, and then the C down. So basically, long story short, we were able to catch this fall from here around 39.55, roughly speaking. And it's currently still following our count and it's still falling down from this count which I have on screen. So currently what I have is that if you magnify this wave A, this wave, then what you will see is something like this. Let me magnify it roughly. So you will see something like 1 down, 2 up, 3 down, 4 up, and 5 down. Right. So in this particular case, I have, as you can see on chart, already pointed out 1 down, 2 up. This is your 3 down, 4 up, and this is going down for the 5th. So it's currently a short, right? And because I posted it in my private Slack group many hours ago, I think 4 or 5 hours ago. So we have already caught this re-entry of shorts. The minimum target for this short will be below wave 3 low. Again, I can be more specific, go to a shorter time frame or do some fib projections, but it's not really required. In these kind of trades, if you are able to catch it early on, you can just trail the profits. So only people who are into forecasting too much and not into trading talk too much about profits, targets, etc., etc. If you are a trader, you will know what I'm trying to say here. We just trail it and we move from one trade to another. So my take on S&P is very clear here. It's still a sell short. It's moving as expected. If you were able to catch it when we predicted it the first time, then just keep trailing it, right? According to your entry, obviously. Nothing to add here. While I talk, it will still continue to go down. Other thing to point out or worth pointing out here is that this market can see some reversal for this wave B, because once this A is down, then there's a small B up. Let me remove this clutter. So keep in mind the cells, even though they are looking very strong, they won't last forever. Nothing really does. So let it fall and keep trailing your positions according to your entry. And this also points me to one other reason why you should keep attending all these webinars and not miss a single one. That if you had caught it right when it first was suggested, then you could trail it. And at this point, there is no point in much listening to me because it's already following our count. We are not doing anything new here. So keep attending these webinars live, guys. They are live because they are trading opportunities. And once you miss one webinar, the opportunity might be gone. That's my take on S&P. Nothing new to add. I'll wait for a few moments to check the comments. If you guys, by the way, were able to catch it with me when we first talked about it, it would be nice if you can post that in the comment section for others to see. John is saying, I'm short in S&P at the moment. Happy, can you see the stop loss on the current movement? So, John, I don't know what entry level you have. Neither do I know what risk you can afford. So, I will not be suggesting you any stop loss level. But what I can tell you here is that the wave 4 generally should not go higher than this 39.17 level. And because there's a huge speed, I personally will not be interested in holding this short if it goes higher than what is this 38.90 level. So I personally will not be interested in holding shorts if it crosses 38.90 to the upside. First thing. Secondly, if it crosses wave 3 lower, then I definitely even don't care about 38.90. Then I will trail it within this range. Getting the point? Within below this last high. I think you should be able to catch it. It's quite simple. So that's the way I am playing it. I hope this helps you. Next chart is still trailing it. Oh, MF Darwals is also in the shorts and trailing it. Nice. So next chart is the chart of Nifty 50. Let's head over to it. And before we head over to the next chart, Nifty and then Bitcoin. If you guys are liking this content, you gotta share it with at least 3 people in your group, Telegram, WhatsApp, or whatever you use, Discord, where traders are, like your trading groups. And if you don't have any such access to any of these groups, then just share it on your Twitter and tag me along. My handle is at the rate of 50 eyes. Where's that? Let me just show you quickly. So this is my Twitter feed, 50 eyes, 50 underscore EYES. So you can just follow me to get updates on the next webinar. The links are all posted here. So what I'm asking you to share is that so that more people can join in the next webinars. What was that? So more people can join in the next webinar, and our participations can increase. And these trading view algorithm as well as YouTube algorithm, I believe they do take notice of where the audience is coming from. So if more people are clicking in from external links and new audience is coming in, that's good for us. Keep in mind, guys, more participation means more good content to come. So let's now head over to the chart of Nifty 50. Let me quickly see which one is it that I'm exactly following. Okay, this looks to be the one we are currently following. So Nifty 50 currently what we have, as we discussed in the last webinar, is looking like we have from this point of reference around 18,888, roughly speaking, W down and possibly X up complete. And after that, what we seem to be having is a possible, let me check one more possibility here very quickly. Does not seem to be holding up. So what I have right now over here on screen is that the possibility that the Y is complete. Now that suggests that there should be some more upside. Now, after the Y completion, there is also the possibility that it will continue down as a triple zigzag, right? But if the market is anywhere near bullish or anywhere near as bullish as was in the what do you call 3-4 weeks ago, then I do not think that that possibility will hold of the triple zigzag. So my current take is that there is a little bit of bullishness on this counter, and which is suggesting that it should see a little bit more upside. And by a little bit more upside, what I mean is that it could enter this zone of 18,500 to 18,450. So that will be what you call 30-40 points higher than the current level. Movement of this market while going up, or this price action, which I am expecting will go up, will suggest what this market is doing, right? And I have also observed something very non-typical here. This market has sort of not touched the downside target. The downside target I had for it was around 18,211 or lower, 18,200 basically. And this market is showing a reversal from around 18,260 something level or 50 something level. So, which is suggestive that somebody is defending the lows, some buying is coming in, or maybe it's a deceptive buying. Everything is possible, but we gotta play it as we see it. And currently, it seems like some bullishness is remaining. So that's my take on Nifty. On the intraday session, when it opens tomorrow, I'll analyze it again, obviously, and play it according to this analysis that there is some upside remaining. You can take it in multiple ways, and currently you can just lower time frame count. I'll just show you. I think I must have taken it as a zigzag. Yeah, this is a simple zigzag I'm taking here. A few more pointers in the shorter time frame perspective. This level, this is the same level, I think. Yeah. So yeah, the marked levels are on the upside are important, as well as the zigzag pattern. You can just use the upside trend line as well if you are doing intraday, like literally intraday. Nothing to add here. Small upside expected. That's all my take on Nifty is. And next chart will be the last chart of BTC. So if you guys have any queries so far, you can just let me know on any of the charts which we discussed. After the last chart, we will just close this webinar. By the way, I'm not even sure how much of this audience even follows the Bitcoin chart. Where is it anyways? Okay guys, so here we are on our last chart of BTC. And let's see what is going on over here. Okay, so I remember correctly, I did some short-term analysis on this chart in the last webinar. I think I have not marked it on the chart, but we discussed it from, I believe, this point of reference. Yep, that was it. So when we discussed this Bitcoin chart last time, which was on Friday, let me see. Yep, 16th December on Friday. 16th December on Friday, around 2 p.m. GMT, which will take it somewhere here. So the market was, I think, somewhere here when we discussed it last time. My take was that from this point of reference, it seems to have completed an A up triangle C. So A, B, C pattern is complete. Corrective 3-wave correction basically is complete. Now a 3-wave correction basically complete could suggest that the market will fall. it could also suggest that this market is just going to go more sideways. And it could also suggest that it could form WXY. So basically what I concluded was that some more downside has opened up, or a possibility that the market will fall down from here has opened up, and other possibilities remain the same, that it can go sideways first or move up first, and it sort of has gone lower as such. So at this point it looks to me like that we have more downside remaining on this chart, and the reason for that is that it looks to me like we have a possible corrective continuation here, or if not corrective, and if a new leg is down, then this is the first impulse of this new leg down. That seems to be one of the possibilities that I see on this chart, right? I am not trading Bitcoin, and I'm not really interested in following it on very lower time frame, but to confirm this count and this analysis, we will have to observe it a little bit more. It's not a pull the trigger yet, right? But my bias basically is down. And if you have seen our past webinars, our bias on the overall swing is that this market has some more downside remaining. Nothing to add here. If you guys enjoyed the content, hit the like button. I'm repeating myself again, but people join in at different times. On YouTube, hit the like button. On TradingView, there's a rocket button, right? And make sure you share it with at least 3 people in your groups, 3 traders, or your Discord or Telegram or whatever thing you are using for your trading communities. That's all from me. Make sure to join in the next webinar. These are conducted Monday, Wednesday, and Friday. I'll just type in the time here: Monday, Wednesday, and Friday at 2 p.m. GMT. Make sure to join in live so that you do not miss on the next best trading opportunity. And before I completely close it, just keep in mind that there are other things. If you are interested in learning, then I have my website. You can just visit it and check my book, Think with the Markets. It's available on Amazon via Kindle, right? You can also check my video courses, and also if you are interested in personal classes, you can check out Training Program LT. You will have to fill out a form for requesting details. So that's my overall webinar. This one is finished at this point, and I'll talk to you guys in the next one. Thank you.